Do you want an investment that can give you instant diversification, is tax efficient, has low fees, is easily traded, and has a solid track record of good returns? I think I can hear you say, "Of course, Kim," loud and clear. Well, you can get it with index funds. Of course, that isn't a huge secret since I've talked about index funds a lot on this channel. But in this video, we are going to go a bit further and actually identify 3 specific index funds that you probably want to start your portfolio with, and that will really stand the test of time. If you want 3 index funds you can hold on to for life, then keep watching. Plus, not only will I share with you the index fund, but also a similarly performing ETF that you might want to check out. Let's go! Number 3 is Shelton Nasdaq 100 Index Direct, ticker symbol NASDX. The ETF equivalent is Invesco's Nasdaq ETF, ticker symbol QQQ. The S&P 500, Dow Jones, and Nasdaq are the most well-known market performance indexes. Simply put, the S&P 500 is a compilation of the 500 biggest companies by market capitalization, while on the other hand, there are only 30 companies in the Dow Jones Index. In actuality, both qualitative and quantitative criteria were used to rank the companies on this list. They must meet certain criteria and uphold a particular reputation. These contain popular blue-chip companies. After the S&P comes the Nasdaq, which contains 3,000 different companies. They're heavily geared toward the technology sector and must be listed on the Nasdaq Stock Exchange. As a result, the stocks in this index fund will be heavily biased in favor of the technology sector. What index is the best then? Well, that depends on your financial objectives. The performance of the entire market will be more accurately reflected by the S&P 500. The volatility of the Dow Jones will typically decrease, so more of your tried and true businesses can be found here, and the Nasdaq will once more favor that technology sector. Sadly, the popular brokerage firm Vanguard does not provide an index fund that closely follows the Nasdaq, but there are others that do. In January 2000, the Shelton Nasdaq Fund was established. It has a 0% expense ratio, which means that for every $10,000 you invest, it will cost you $50 and a 22.4% 10-year return. As I mentioned, the ETF equivalent is QQQ. The truth is that ETFs and index funds share a lot of characteristics. It has an expense ratio of 0.2% and a 10-year average return rate of 22.53%, costing you $20 for every $10,000 invested. Number 2 is the Vanguard 500 Index Fund, ticker symbol VFIAX, or the Fidelity 500 Index Fund, FXAIX. The most popular index for tracking the stock market is the S&P 500, and these funds simply hold whatever the S&P 500 consists of, and they just replicate the index in those precise ratios. They both hold the same assets. The expense ratio for the Vanguard S&P 500 fund is 0%. Or $4 for every $10,000 invested. Additionally, a $3,000 initial investment is required, and the 10-year average return is 16.51%. I realize that the initial lump sum of $3,000 can be a bit of a barrier for new investors, but it's important to note that if your company continues to use Vanguard for its 403(b), 401k, or simple IRA retirement plans, you can choose any of the Vanguard funds and the initial minimum is waived. Just something to keep in mind. However, you can always go with Fidelity if you're investing in your own and not through a company and finding it difficult to make that initial investment. With a 0.15% expense ratio, the Fidelity S&P 500 will cost you $15 for every $10,000 you invest. Additionally, there is no initial investment requirement, and the fund's average 10-year rate of return is 16.54%. If you're looking for an ETF equivalent, then check out ticker symbol VOO, which contains most of the same holdings but has the advantage of being exchange traded, which means you can buy and sell it just like a stock. Finally, number 1 is the Vanguard Total Stock Market Index Fund, ticker symbol VTSAX. With Fidelity, you can check out the Fidelity Total Stock Market Index Fund, or ticker symbol FZROX. Many Vanguard index funds and many Fidelity index funds have the same stocks and bonds in their portfolios. But I do think that Fidelity has made some small steps forward in recent years. For example, some of their index funds have an expense ratio of 0% and a minimum initial investment of $0. Now, many investors are very interested in those zeros. It's important to remember that the transaction costs for these index funds will be passed on to you, the investor, in some way. So technically they're not zero, but they're as close as you can get. If I were just starting out as an investor today, I might be more likely to choose Fidelity because there's no minimum investment and there are no fees. The Fidelity Zero funds have been around since 2018, so they're fairly new. However, they are a great choice for people who are just starting to invest. The Total Stock Market Fund holds literally every stock. There are big companies, small companies, and everything in between, including companies in the tech sector, the healthcare sector, consumer staples, and other areas. They show exactly what the stock market is like as a whole. I really like the idea of investing in the whole economy, so this is my top choice. And just like with funds that follow the S&P 500, stocks in this fund are held in the same proportion as their market share. So bigger companies like Apple, Microsoft, and Google are held in larger proportion, while smaller companies have less representation. The expense ratio of the Vanguard Total Stock Market Fund is 0%, which means you will pay $4 for every $10,000 you invest. The traditional minimum investment is $3,000, and the average return over the last 10 years has been 16.29%. The expense ratio for the Fidelity Total Stock Market Fund is 0%. Keep in mind that these transaction costs will be passed on to you as an investor in some way, and that the initial minimum investment is $0. Since this fund was only started in 2018, it doesn't have a 10-year average, but the Fidelity Total Stock Market Index Fund non-zero version has a 10-year average return of 16.25%, so that can be a point of reference. And if you're looking for an ETF equivalent for these total stock market index funds, then definitely check out VTI. It's one of the most popular ETFs out there, and Vanguard did a great job of mirroring the holdings in their VTSAX index fund quite closely. Of course, this isn't an exhaustive list of index funds. Is there such a thing? But if you're just starting out, you probably can't go wrong starting with these 3 funds that you can hold on to for life. Like I said in the beginning, investing in index funds is one of the smartest investment moves you can make, especially this year. But always be sure to do your due diligence and research your options. Probably the best place to start with that is this video, where I explain index funds in detail and give you all the details. See you there!